Have you ever found yourself wondering why your credit score feels so important, especially when you want to buy a car, get a credit card, or even rent a new apartment? It's like this mysterious number that can either open doors or slam them shut. But what exactly is a credit score? How is it calculated? And most importantly, how can you improve yours quickly? Today, we're going to talk about all that in simple, clear language. By the end, you'll have practical tips to boost your credit score faster than you thought possible. If you like learning about money and want to make your financial life easier, go ahead and hit that like button now, and don't forget to subscribe so you never miss a video. All right, let's get started and count down from 10 to 1 with the best ways to understand and improve your credit score. 10. Know exactly what a credit score is and why it matters. Before trying to improve your credit score, it's important to understand what it actually is. Think of your credit score as a number that tells lenders how likely you are to pay back borrowed money. It's like a report card for your financial trustworthiness. Credit scores generally range from 300 to 850, with higher numbers meaning better credit. A good score means you're seen as less risky, so lenders are more willing to give you loans or credit cards, often with better interest rates. A low score can make borrowing more expensive or even impossible. Your score comes from information on your credit report, which tracks your credit history, things like loans, credit card usage, and whether you pay on time. Understanding this connection helps you see why your everyday money habits impact your score. 9. Regularly check your credit reports for mistakes. One of the best first steps to improving your credit score is to check your credit reports regularly. You have 3 major credit bureaus: Equifax, Experian, and TransUnion, and each keeps its own version of your credit history. You're entitled to 1 free report per year from each bureau at annualcreditreport.com. Why check your report? Because sometimes there are mistakes. These errors could be accounts that don't belong to you, incorrect late payments, or wrong balances. Such mistakes can lower your score unfairly. If you find any errors, dispute them right away. The bureaus are required to investigate and correct mistakes if you provide proof. Fixing errors can lead to a quick boost in your credit score, sometimes within a few weeks. 8. Pay all your bills on time. It's more important than you think. If there's one rule to live by when it comes to your credit score, it's paying bills on time. Payment history makes up the biggest chunk of your credit score calculation, about 35%. Even one late payment can hurt your score, and late payments can stay on your report for up to 7 years. So setting reminders or automating payments is a smart move. If you have missed payments in the past, don't stress too much. Start paying on time now, and over time, your positive payment history will help your score recover. 7. Keep your credit utilization ratio low. Your credit utilization ratio is the amount of credit you're using compared to your total credit limit. It's recommended to keep this number below 30% and even lower if possible. For example, if you have a credit card with a $2,000 limit, try not to carry a balance higher than $600. Using too much of your available credit signals to lenders that you might be overextended financially. Paying down your balances as quickly as possible helps improve this ratio and can raise your credit score fast. If you can, pay off your credit card balances in full each month to avoid interest and keep your utilization low. 6. Keep old credit accounts. Open length of credit history is another important factor in your credit score, making up about 15%. The longer your accounts have been open, the better. This shows lenders you have a track record of managing credit over time. If you have old credit cards you don't use, it's usually better to keep them open. Closing them can reduce the average age of your credit accounts and shrink your total available credit, which might lower your score. Just watch out for cards with high annual fees. If you don't use the card and the fee isn't worth it, closing might be the better option. But if it's free, hang on to it. 5. Avoid opening too many new credit accounts at once. Each time you apply for new credit, lenders do what's called a hard inquiry on your credit report. These inquiries can lower your score slightly, especially if there are several in a short period. Opening several accounts quickly can make lenders nervous because it might look like you're desperate for credit or in financial trouble. If you're rate shopping for a loan like a mortgage or auto loan, try to do all your applications within a 2-week window. Credit scoring models often count multiple inquiries in that period as just one inquiry, reducing the negative impact. 4. Mix up your credit types. Having a mix of credit types, such as credit cards, installment loans, like a car loan or student loan, and mortgages, can be good for your credit score. It shows lenders you can manage different kinds of credit responsibly. This factor counts for about 10% of your credit score. But don't take on debt you don't need just to improve your mix. Only open new types of credit when it makes sense for you financially. If you already have a good mix, keep managing everything well by paying on time and not borrowing more than you can afford. 3. Pay more than the minimum payment. Whenever possible, credit cards often allow you to pay a minimum amount, but only paying this minimum can hurt your progress. When you pay just the minimum, your debt reduces very slowly because interest keeps adding up. Paying more than the minimum reduces your debt faster and lowers your credit utilization. It also shows lenders you are serious about managing your credit responsibly. Even small extra payments can make a big difference over time. So whenever you can, try to pay a bit more than the minimum required. This habit helps your credit score improve steadily. 2. Deal with past due accounts and collections. Quickly, if you have accounts that have gone to collections or are seriously past due, these can have a heavy negative impact on your credit score. The best thing to do is reach out to the creditor or collection agency and try to negotiate a payment plan or settlement. Some creditors might agree to remove the negative record from your credit report once you pay off the debt, which is called pay for delete. Even if they don't remove it, paying off collections stops the damage from getting worse. Plus, future lenders will see that you've taken responsibility and worked to fix your credit, which helps you in the long run. 1. Be patient and keep good credit habits. Finally, while some actions can improve your credit score quickly, like fixing errors or lowering your balances, building and maintaining a strong credit score takes time. Credit scores reward consistency, paying your bills on time every month, keeping your balances low, and avoiding risky credit moves are habits that pay off over months and years. The key is to be patient and stay consistent. Your credit score is like your financial reputation. It grows stronger the longer you prove you can manage credit responsibly. Remember, even small positive changes can add up to big improvements over time. So that's the full rundown. 10 clear and simple ways to understand and improve your credit score fast. Your credit score is more than just a number. It's a tool that can help you get better loans, save money on interest, and reach your financial goals quicker. If you found this video helpful, please hit the like button. Share it with friends or family who might need a credit boost, and make sure to subscribe for more easy tips on money and credit. Thanks so much for watching. I'm excited to hear how these tips work out for you. So leave a comment below if you have questions or want to share your progress. See you next time.